Undoubtedly, by now, you've heard many times how the Spanish flu was one of the deadliest pandemics in history. It infected about 500 million people. At that time, 500 million people was more than one quarter of the global population. The flu is reported to have killed about 50 million people. But what happened to the stock market when the pandemic ended? Well, let's take a look. If you're watching any of the national news channels, all you will likely see is the coronavirus numbers have been getting worse. However, those of us who have been watching the stock market, the difference couldn't be any wider. The stock market appears to be improving after the hard crash. During this time, we've discussed that the stock market is a discounting mechanism. It typically trades on what will happen 6 to 9 months from today. You must have read, seen, or heard that we're going to have another Great Depression. The stock market will be the worst in our lifetime, or unemployment will skyrocket. Some of these stories still exist as I record this video. Me? I may be more optimistic than most people, but I saw the Fed and other central banks step in and backstop the markets while the sentiment was getting worse. My opinion was that perhaps the worst news was already priced into the market. This is not to say the world will be 100% back to normal soon. I just don't want you to let your emotions affect your investment decisions. You could be making a big mistake. When we come out of this crisis, I believe we will be in a very favorable stock market environment. The economy will eventually get back to its pre-virus levels. The global central banks will continue to provide liquidity and low interest rates until the economy recovers or longer. There will also be long-lasting psychological effects that will keep sentiment negative for a while. All of these conditions will be good for the stock market. The point is, don't get too negative on this market. Keep your objectivity. So, back to the question, what happened when the Spanish flu pandemic ended? As you can see from this chart here from Investors Business Daily, we had one of the greatest bull markets in history from 1920 to 1929. So, file that away. All right, let's go to our charts and let me show you something that is developing right now. I want to show you a few charts here, beginning with the Spiders Dow Jones Industrial Average, the ETF. It's the Diamonds, DIA, and this is a good proxy for the Dow Jones Industrial Average. We're looking at a 15-year monthly chart. Now, if you go back here to late 2008, which was not the bottom of the great financial crisis, but the downtrend right prior to the deep plunge in 2009, if you take that point there, and you draw a line all the way through here to the current level there at 239.68, that's what you get. So, in my humble opinion, here in 2009 and also here in early 2020, those, in my opinion, are outliers. This trend line is connecting all of these areas here, these downtrends, all the way on up here. So I think that the downtrend is over, and I think the wall of worry begins here. Let's go to another chart. All right, same time frame, and this is the spiders, the SPY, taking this point here in late 2008, and again drawing this trend line all the way up to the current point there. Same thing. All of these downtrends create this upward moving trend line. Now, it's not to say that we might not have another correction. Perhaps that could go below this downtrend, as perhaps in a couple of other instances here and here. But the main point is that I think we're back on track to an upward trend line. Let's go take a look at another chart. Now this chart here is the iShares Russell 2000 ETF. IWM is the symbol, and the Russell 2000 basically has been the laggard of the major indices, as we talked about many times before. So we do the same trend line. Now this comes to a point above where we are right here at 122. So we are connecting these points here on the way up. So I think that the Russell will head up to that trend line soon enough, but being the laggard, I think the Russell 2000 is behind the other indices. Let's go to one last chart. Now, looking at this here is the Fidelity Nasdaq Composite Index Tracking Stock, or the ONEQ, the symbol. Now, as opposed to the Russell 2000, the Nasdaq is the strongest of the major indices, and it's ahead. And you can see that here. Taking the trend line, moving on up here, you come to this point there, about 300, and the current level is at 330. So the Nasdaq is a bit ahead of the trend line and seems to be the strongest of the four major indices that we just looked at. So you can check out your individual stocks, and I think you might be surprised to find that there's a lot of stocks that are tracking this trend line and indicating to me that this downtrend here in 2020 and then also there in 2009, those are the exceptions. So, in my humble opinion, I think we're back on the road. We're going to be heading on up. It's not going to be a straight line. So, just be patient and be prepared. For today, that's ChewDog Charts. Thank you.